Hello everyone, welcome to another episode of the Anatomy of the Trade. Today we're going to just discuss the market and specifically we're going to discuss the PnF counts, which are very interesting at this point. But before we do that, let's look at the vertical charts. And obviously we're looking at the top four. Those are the S&P, NASDAQ, Russell, and the Dow. And let's just start with the S&P and just the overall trend picture. And as you guys could see, I put here, the trend lines that could be a little bit questionable, right? Like, why am I putting it this way? Well, there are quite a few touches still, both at the point of the support and the resistance. And this looks like more of the oversold condition. So we want to capture the trend as much as we can in one channel. And it still makes sense price action wise, what is going on and in this channel. So we see how the mean resistance or medium resistance provides that support and resistance multiple times as well. This is another way of checking whether this channel is okay or not. So far I would just say we're still in the uptrend, and we're still in this short-term trading range for the S&P, and we're trying to get out of this. So Franz, what are your thoughts on the S&P price structure and on the uptrend?
I really like the way you've got the trend lines delineated here. It makes a lot of sense to me, and I really like them because that's the overvalued equation that market participants are looking at. So it gives us an idea, at least potentially, where we might be as long as the channel remains intact. As far as the structure, I like the trading range, and we were talking a little earlier about an analog with this range and an earlier period back in kind of April to May to early June that looks somewhat similar, especially when you look at the supply and demand signature especially towards the end of the there's that little sell-off. The market goes down, collects itself at the supply line of this up channel, and then takes off in the first case. In the second case, appears to be following kind of that same analog. What do you think?
Yeah, it's very interesting how it kind of happens the same way. So the first push up to the level of the resistance, and then some supplies coming in. We could see that, somewhere actually supply here is diminishing, but still, relatively high. Here supply is increasing, definitely. So the effort to push the price down is increasing. And what does the price do? So we're doing the same type of lateral movement to the right. And after the resolution of it, where we have the next push up, then we rest again for a little bit. So maybe we're gonna just have a couple of days here, and then we go into this final climactic run. If this analog would work, and if the price action would repeat itself in the same way, and we're seeing like overall here, volatility is a little bit more than in this area. It's a little bit more compact. So it shows a little bit more weakness than the previous analog right here. And we're seeing how supply is actually starting to come in at different points. So we're not expecting a very big move like we've had here, but if this analog would work, what are our expectations? Well, with that, we're gonna overcome this high. That's number one. Probably touch 33 here at around the mean, and then try to assault 34 and the all-time high. And if we do, our expectation here is that this is probably going to be the final push, especially after this preliminary supply type of action. And if this is going to be the last push, then the question is, where do we go from here? So obviously a reaction. What kind of reaction and where to? So I would expect and I would anticipate in both cases, a quite substantial reaction, the biggest reaction that we have seen so far on the way up, somewhere into the 3,000 to 2,800 type of area. So this would be our target. So therefore, as we always anticipate something, and this scenario might not come true, but in anticipation of it, we have to think about what do we do with our current portfolio, and then how do we protect ourselves? How do we hedge against the potentially, much larger reaction? And then after this larger change of behavior reaction, probably a consolidation going into the election cycle and maybe even into 2021, and also on the background of, people coming back to schools in September, and then we might have another wave of, virus infections, on the rise. So we'll have to see. Franz, what else here that may be catching the eye?
Well, it's just a reflection. It's interesting. I mean, as humans, when we see a trend, we anticipate that it's going to end. Because nothing goes in a straight line forever. So we're looking at every market participant is looking at this uptrend and saying, "Oh, it's gone far. Maybe it's coming." And we hear that. We see people making the assumption that it's already over, and we know that tops take a lot longer because people do anticipate them. And I think it would be kind of classic market behavior if we did get another kind of big move up towards the supply line of this channel, that kind of, everybody got sucked in, and then be a great opportunity for the market to turn around, like you say, and give us a bigger bath.
Absolutely. Another point here that I wanted to make is about the bar on Monday, 713 bar. This was an interesting bar because it had this, very interesting intraday action where the price went up um, a little bit more than 1%, and then it reversed and went down and closed lower. And I think that on NASDAQ, actually, that particular swing from the top to the bottom was around 4% decline. So it was a significant decline. It was a significant profit taken. By the way, right away, let's just kind of acknowledge that it wasn't the same as this bar right here. So there is a huge difference in the way of how the price has traveled. And if we would look at the volume signature, so definitely lower, but I would be expecting that, with this type of volume signature, we would probably produce a little bit more. Maybe something like this, where we have had the same volume signature and the price moved much, much more, or slightly more, I would say. Like it looks to me like a slightly larger spread. So even this subtle, clue can give us an indication that even though there was a selling pressure, somebody was buying because the spread has contracted. And then obviously just a very, very simplistic Wyckoff way of looking at these things. Action needs to be followed by the test, and then needs to be followed by the confirmation. Action needs to be followed by the test, and then by the confirmation. And we've had this type of what we call them the upthrust probes quite a lot on the way up in this market. Look into this area right here. This is the bar that produced quite a lot of bearish outlook for a lot of analysts and just traders. And this was the bar where a lot of people were thinking, that's it, we're done. But again, if we would be thinking in Wyckoff terms, so action and then test and confirmation comes on the next bar. So we kind of see that vertical absorption of the supply that comes in almost instantly within the next 1 or 2 days. And the same is happening here. And it could fail from here, but it doesn't really matter. You still have to follow, the way of how you look at this. Another potential spot here was maybe like right here, here as well. So just be careful about that, guys. When you tape read, you have to really wait for the confirmation and the test to develop, in order for us to make some kind of judgment. Okay,
Great points.
well, also really quickly, we wanted to talk about a little bit of the rotation. So obviously Nasdaq had that big bar, and we're still making uh, a lower high, intraday lower high relative, let's say, to the S&P that made like a hairline high right here, and then obviously look at Russell and look at the Dow. So this is just very natural rotation where we have a profit taken in some of the leading names and Nasdaq names, and then where would the money go? The money has to go to other places. So therefore, there is a lot of undervalued assets in the Russell and the Dow, and then S&P as well. So the money just kind of like goes to other assets rather than the tech fronts. Your last thoughts here on the vertical charts, and then we'll go to the PnF.
Just a great discussion, and I think that the rotation, like you say, money has to go somewhere.
Mm-hmm. Yeah, absolutely. All right. Well, one of the things that we wanted to discuss today, and this is usually something that we don't discuss or don't discuss enough, is the PnF. There was a question about the construction of the PnF that I want to address right away. You might see and observe that on this chart, there are quite a few places where in one column you have two boxes. So Wyckoff way of constructing the PnF chart with one box reversal, and this applies only to the one box reversal, is all about condensing the data and making sure as the requirement that each column has at the minimum two boxes, not one, but two. So once we've dealt with this, our data more compressed and we could start taking counts. And we're using the traditional 100 points per box. And sometimes I have this question as well. Well, why this box size? Well, I usually look at the price and kind of like vaguely calculate what is the 1% of the price right now. So percent makes a lot of sense to me. And then either with the traditional or user-defined or the percentage scale, it's 100 points, and then from there you start your counts. So looking at the counts, we're looking at this count, which is not the largest count by any means, but it incorporates the count from the sprint or the test of sprint and phase C into the climactic action. And it gives us, roughly around 11,000 for NASDAQ, which is later being confirmed by two reaccumulation areas, and they all showing kind of the same target. So whenever this happens, it doesn't really mean that 11,000 is going to be the top, but it might be. And we still might kind of see this, although we'll have to see whether 11,000 is going to be that top. But it was interesting to observe how the price went to 11,000 and then came back to 10.5, I believe, and we hit that that uptrend channel line here overbought. So we still will have to see, but there is a much larger mega count here for 13,200, and that incorporates a backup action and a sign of strength into the count, and also the preliminary support. So this is kind of like the maximum way of extension for the possible uptrend. I would say at this point, S&P is very important just because it resumed the leadership. The Dow is important. So we want to see how those targets are being fulfilled. So in the on the S&P, if we look at the same type of structure, in terms of the counts. Our more conservative counts is saying that we'll have the all-time high, but then the biggest question is, will we? Will we get there? Will we have the strength to do that? So it's all going to be in the tape reading around this area right here, whether we could overcome this high. If we do, then we could have some kind of assault into this area, to the all-time high area. And in this case, we do have a couple of confirming counts, so that's good. That's what we're usually looking for, confirming counts, the ones that are saying that a regional count should be confirmed by most recent or recent reaccumulation counts as well. And it seems like, yeah, there is some confirming counts. And if the price goes up into the all-time high, it would definitely be in line with the uptrend channel and all of the lines that we have here. Franz, so what are your thoughts on both of the slides and the PnF in general here?
Well, first of all, a question for you on this S&P count. On the NASDAQ, you did kind of a large count that went from the backing up action all the way over. On this one, I don't see that.
Yeah,
and I'm wondering if there's a reason
definitely. Yeah,
why we're not showing it here. And then if you can answer that, and then I've got kind of an observation on PnF in general.
absolutely. So when you think about the counts, and especially of the instruments that kind of look the same, that have the same structure, that have a high correlation, but one is outperforming and one is underperforming. So for the leading uh, asset, you want to use your more aggressive counts, because as it leads, it might fulfill those aggressive counts better. And then for the lagging instrument, you want to use your more conservative counts just because of that weakness. And that's the whole idea behind, taking it either, up to the selling climax or maybe to the previous stopping action where the column of O's showed us, availability of the supply. I'm also kind of thinking for the S&P here that all-time high, and then we have a reaction. So 34.60 makes a lot of sense, and it's starting to be confirmed, with some of the reaccumulation areas. For NASDAQ, this is something where we want to extend that count as much as possible, but still we want to see, either there are some confirming counts, and we want to obviously have the max count for the asset that was leading a lot. So kind of keeping in mind that if there's going to be a continuation of the climactic run, it's still going to continue, quite significantly, into the new territory. Franz?
Okay, yeah, that's very helpful. Thank you. Just a couple observations. A lot of times when especially newer people look at point and figure, their eyes glaze over. And I know I did it first, and it was almost like I don't even want to deal with this, but it's a great tool to have in your toolbox. So where can you go to get information? Well, first of all, there's some free resources on YouTube, and then if you go to the Wyckoff Analytics website, there are some very structured educational sessions that were put together by Roman and Bruce Fraser, and they're great stuff. I mean, if you really want to go through in depth and study, have all your questions answered, yeah, there are some of the free resources, and then you can go into the Wyckoff Analytics, and if you really want to get down in the weeds and roll up your sleeves and become, really proficient, you can take the courses that are being offered. So that's kind of a little commercial, but it's great to know, and it's definitely, point and figure charts and being able to count them and come up with price objectives. And I know when people look at, for example, stock charts has the ability to do price targets, but they're doing vertical counting, which is a completely different methodology than what we use here in the Wyckoff methodology. So it's great stuff to know. And
Yeah.
there are places that you can go to increase your, to move up the learning curve.
Yeah, absolutely. And thank you for reminding us and everybody, what could be done to study the Wyckoff point and figure horizontal counts. So I would start here with our YouTube channel and would go to Bruce's part 1, part 2 free tutorials on the PnF. You could also watch Hank Pruden last presentation on the PnF. That was, such a great presentation. And then, as Franz has mentioned, go to our website. We have 3 uh, series on the PnF. You could see it here as well. So part 1, part 2, part 3, and Bruce and I were discussing, those in quite details. All right. So what else, Franz, could we mention here about the PnF? Obviously, PnF is not the most accurate tool. Sometimes it could be so accurate that, you're just like, wow, how is it possible? And it's a guideline. Wyckoff would say, or let's say like Hank would say about the PnF, that once the price comes to the target zone, this is where you stop, listen, watch, meaning that you need to see what kind of reversal patterns we have in that area. So for instance, at 11,000, we had an intraday reversal pattern. We had also in daily spread daily bar that looks like a reversal, but it needs to be confirmed. So that's what we're looking for. So those are guidelines. Those are not necessarily, this is how it's going to happen type of tools.
Mm-hmm.
And probably that's it on the PnF. Franz, your final thoughts?
Yeah, great observation. It's not etched in stone, but it's a lot better than, it's sort of like radar, doesn't, you can't necessarily see exactly where you're going, but there's something out there.
Mm-hmm.
So kind of the way I think about it.
All right. Well, as usual, guys, thank you for watching, and we're gonna come back to you in 2 weeks. This is a little bit of the vacation time for us, so looking forward to that. And as usual, if you have any questions or you have any trades to discuss, email us at wyckofassociates@gmail.com, and we're looking forward to the next video. Thank you so much for watching. Franz, thank you.
Thank you, Roman.